There's a lot of confusion heading into the 2025 tax season, and believing the wrong information could do more harm than good. Today, I'm breaking down what's real so you don't fall victim to an audit. Overtime is not fully tax-free. Stop believing everything you heard about overtime taxes. A lot of tax preparers and even CPAs are getting the 2025 overtime tax rules wrong. And if you don't understand the fine print, you're either leaving money on the table or you're setting yourself up for disappointments. Let me break down what actually counts and how this really impacts your refund. Did you work overtime in 2025? If so, this is something you'll want to pay attention to because it could lead to a solid tax refund when you file the upcoming taxes in the upcoming months. Here's why. Throughout the year, your employer most likely continued withholding taxes on your overtime pay. This wasn't a mistake on their part. It's mainly because payroll systems weren't updated in time. Even though the One Big Beautiful Bill was signed on July 4th and made the no tax overtime rule effective starting January 1st, 2025, most payrolls departments didn't have the software or the guidance needed to adjust the withholding immediately. So taxes were kept as usual. This means money wasn't lost, it was just withheld. But the IRS isn't going to automatically refund it to you. They're not going to just cash app it to you. You'll need to claim it when you file your taxes. And start with reviewing the pay information. First, your final pay stub for December 2025, preferably your very last one for the year. Let's be real. Most people never look at these statements unless something seems off. But this time, it matters. Your paycheck stub should show the year-to-date breakdown, your earnings, including regular pay, differential, premium pay, and overtime pay. The key to focus on your year-to-date overtime, if listed, and the overtime rate. Let's use an example to make this clear. Say your regular hours is $30 an hour. Your overtime rate would be $45 an hour, which reflects time and a half. If you work 10 overtime hours in that pay period, you will earn an additional $450 for that pay period. Here's the important part. Under the OBBB, overtime is not fully tax-free. It's only tax-free on the premium portion. In your case, the $15 an hour is excluded from taxes, not the full $45. The base $30 an hour is still treated as regular taxable income. If your pay stub doesn't clearly separate the premium portion, you'll need to calculate it yourself or find someone like myself. For example, assume you earn $4,500 in total overtime hours for the entire year and you worked 100 hours. Overtime hours cannot be deducted for the full $4,500. Instead, you'll take $15 premium difference multiplied by 100 hours. This gives you $1,500, which is the deductible amount tied to the overtime pay for 2025. If your pay stub only shows total overtime pay and not the total overtime hours, you still can work backwards. Divide the $4,500 total overtime pay by the 45 overtime rate to get 100 overtime hours. Then multiply 100 hours by 15 premium portion to arrive to the same $1,500 deduction. That $1,500 amount, you may be able to deduct it on your 2025 tax return based on this scenario. Just remember this, there's always a cap. The maximum overtime deduction is $12,500 if you're single, $25,000 if you're married filing jointly. But before we go any further, there's one important clarification to make. The overtime benefit is not a tax credit. It's a tax deduction. And those two things work very differently. A tax credit reduces your tax bill for dollar. For example, if you qualify for a $1,000 tax credit, your tax owes drop down $1,000. A tax deduction doesn't work that way. Instead, it lowers your taxable income, which reduces your tax base on whatever tax bracket you fall into. Because of that, deductions are actually more valuable for people with higher tax bracket. Let's walk through a real life example so this makes sense. Assume you earn $100,000 in total for 2025 as a single filer. Out of that $100,000, $20,000 came out for overtime. When you file your taxes in 2026, you'll also get a standard deduction. For 2025, this year, the standard deduction is $15,750. That's the amount that's not taxed. So we start off with your $100,000. Then we're going to subtract the $15,750 for standard deduction, leaving you with $84,250 in taxable income. Now here's where the taxable income is broken down under the new federal bracket. The first $11,925 is taxed at 10%, $36,550 will be taxed at 12%, and whatever remains, in this case, $35,775 will be taxed at 22%. The 22% is your marginal tax rate, and that number matters the most when it comes to deductions. Now go back to your overtime. Out of the overtime, let's say $7,000 represents the premium portion. That $7,000 is deducted from your taxable income. Since deductions came off the top, that reduced your tax at your highest rate, and in this case, it's 22%. When you multiply 7,000 by 22, you're left with 1,540. This means your overtime deduction could increase your federal tax refund by about 1,540. You're not getting the full $7,000 back. Again, this is not a tax credit, but it still results in real savings. It's also important to remember that it only applies to federal tax income. State taxes you still have to pay, unless you live in states like Florida, Nevada. On top of that, overtime pay is still subject to Social Security and medical taxes. Those don't just go away. The IRS always gets its cut somewhere, some way. There's other factors to keep in mind. Income limits. The government allows a deduction only to a point. Under the OBBB, the overtime deduction begins to phase out once your modified adjusted gross income exceeds $150,000 if you're single, or $300,000 if you're married filing jointly. Once income reaches $275,000 for a single filer or $550,000 for married filing jointly, deduction disappears completely. If your income falls in between those two ranges, deduction is reduced gradually. Specifically, the deduction is reduced by $100 for every $1,000 your income exceeds the threshold. Let me break that down in numbers. Imagine you had a strong year and you earned $200,000 as a single filer in 2025. Since the phase out starts at $150,000, we'll subtract $150,000 from $200,000, leaving you with $50,000 in excess income. The full phase out range is from $150,000 to $275,000, which leaves a total range of $125,000. Next, divide your $50,000 in excess income by the $125,000 phase out range. That equals 0.4 or 40%. That means you lose 40% of the maximum allowable deduction. The maximum overtime deduction is $12,500. When you multiply that by 40%, you get $5,000. That $5,000 is a portion of the deduction you lose. Subtract that by the $12,500 maximum you are allowed, and that leaves you with $7,500 allowable deduction. So if you earn $200,000 in 2025 as a single filer, $7,500 would be the maximum overtime deduction you could claim, assuming you work enough overtime to qualify for the full amount before it phases out. Putting it all together, this is what it means going forward. If you work overtime in 2025, that may be money waiting on you when you come to file your taxes. It might not be as much as you thought, as much as you might have heard on the headlines, as much as these YouTubers are saying, but it's still meaningful. The key is to understanding the deduction, how it works, knowing the difference between a deduction and a credit, staying within the income limits, and calculating the premium portion correctly. If you don't want to guess, assume, or rely on headlines when it comes to your taxes, bring it to the professionals who actually do this every day here at New Age Netgroup. We have over 15 years of experience in the tax business, and we stay on top of the rules so you don't have to. Whether it's overtime, deduction, credits, or complex situations, we focus on accuracy, strategy, and making sure every dollar that you're legally entitled to comes back to you. When it's time to file, don't gamble with your refund. Come to the professionals at New Age Netgroup and get it done the right way.